Hello and welcome back to Global Value. In today's video, we're going to be performing a fundamental stock analysis of Medtronic PLC, ticker symbol MDT. Medtronic is a dividend aristocrat that has increased their dividend payouts for each of the last 45 years. So they are only 5 years away from becoming a dividend king, which would put them in select territory amongst businesses worldwide. Currently, Medtronic is trading for just over $93 per share. Year to date, their stock price is down 11%. Over the past year, their stock price is down 30%. Going back 3 years prior to the start of the global pandemic, Medtronic is down 10%. Going back 10 years, however, Medtronic's stock price has compounded at a rate of just under 9%. And going back prior to the global financial crisis, Medtronic's stock price has compounded at a rate of just about 3%. Keep in mind that this is not including dividends, but this is significantly below the market overall. So Medtronic is trading just about $7 over their 52-week low, which is down about $28 from their 52-week high. Medtronic is a very large business. They have a $123 billion market cap. For some background about the business, Medtronic is one of the largest medical device companies that develops and manufactures therapeutic medical devices for chronic diseases. Its portfolio includes pacemakers, defibrillators, heart valves, stents, insulin pumps, spinal fixation devices, neurovascular products, and advanced energy and surgical tools. The company markets its products to healthcare institutions and physicians in the United States and overseas. Foreign sales account for almost 50% of the company's total sales. Medtronic was founded in 1949 and is headquartered in Dublin, Ireland. So for today's fundamental analysis, we're going to be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics of Medtronic's business to come to a holistic and beginning understanding of their fundamentals. So let's get right into our analysis. Starting off here with pillar number 1, we want their average PE over the past 5 years to be below 22.5. So currently Medtronic is trading for just under 25 times earnings. Over this time frame, they've traded all the way up at 62 times earnings and as low as 18 times earnings. So this is going to fluctuate significantly with the amount of earnings the company is bringing in quarter to quarter and the different charges against those earnings. But averaged out, Medtronic is trading at about 35 times earnings, so quite a bit above that metric we're looking for, and this is going to be an X to start off here on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are going to be captured here by return on capital. So Medtronic has produced returns on capitals that are in the high single digits. Over this time frame, they've averaged just about an 8% return on capital, so slightly below that 9% metric we're looking for. So their returns on capital are just about average. So although they're average, it's below that 9% we're looking for. This is going to be our second X here on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. Medtronic has grown revenues just a smidge from about $30 billion in their financial year for 2017 up to about $31.5 billion for their most recent financial year. So this is going to be our first check here on pillar number 3. Although they've just grown revenues, again, just by a smidge. Pillar number 4, we're looking for 5-year net income growth. Medtronic has grown net incomes from $3.1 billion in their financial year that ended in the spring of 2018 up to $5 billion in the most recent financial year. So this is going to be our second check here in a row on pillar number 4. And so far through 4 pillars, we're 2 for 4. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business buys back stock and decreases the number of shares that they have outstanding, they're increasing your ownership percentage in the business, which ultimately increases the percentage of the business's profits that you're going to be entitled to without you having to spend a dime. So we want businesses that are buying back shares when the business is trading for reasonable valuations. Here, they've been trading for higher valuations, and Medtronic has pretty much kept their shares outstanding flat. Over this time frame, they bought back about 1% of shares outstanding, which, given their relatively high valuations over this time frame and their limited growth prospects, That's probably a prudent use of capital in this case. This is a good sign here on pillar number 5, and this is going to be our third check in a row. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business, and it can be used to pay dividends, pay down debt, make acquisitions, or reinvest back into the business. A business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be worth. So looking at their free cash flow profile, Medtronic has grown free cash flows from $3.6 billion in fiscal 2017 all the way to $6 billion in their most recent fiscal year. So this is going to be a check here on pillar number 6. Over this time frame, in an average year, they're producing about $5.25 billion of free cash flow. We'll be using that number coming up here on pillar 7 and 8. Pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So this is going to help us evaluate how the business utilizes debt. As of the end of their most recent fiscal year, Medtronic had about $14.3 billion of net debt. When we multiply their average 5-year free cash flow of $5.25 billion, that brings us to over $26 billion. So this is a big check here. The company is at best only using modest amounts of leverage, and the amount of leverage/debt that they're taking on is very healthily supported by their abilities to produce free cash flows. This is a good sign here of a conservatively financed business, and this is going to be a check on pillar number 7. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting point for evaluation of the business. So currently, Medtronic has a $123 billion market cap. When we multiply their average 5-year free cash flow of $5.25 billion times 20, that only brings us to $105 billion. So we're off here by nearly $17 billion. This is going to be an X on pillar number 8. If a 5% average free cash flow yield is a reasonable valuation for this business, then it looks like the market is currently richly valuing Medtronic's business relative to their abilities to produce average free cash flows. Just because this is an X doesn't mean that you're going to overlook the business. This type of analysis is a holistic and beginning starting point to learn about the fundamentals of Medtronic and to really determine whether it's worth your while to dig deeper and learn more about the business, which you can do by reading the company's filings and following the company more closely. This analysis is not financial advice, and it's not a buy or sell recommendation of Medtronic. Lastly, as mentioned, Medtronic is a dividend aristocrat. They're closing in on becoming a dividend king. They've paid out an increasing amount of dividends in each of the past 45 years. Even with their strong historic track record, we still want to look and make sure that the business's dividends are healthy and supported by their abilities to produce free cash flows. In each of the past 5 years, as in each of the past 45 years, they've increased their dividends. Over this time frame, they've also increased their cash flows per share. And while their payout ratio was pretty darn close in the fiscal year for 2017, Medtronic does a decent job here of producing more free cash flow per share versus their dividends that they're paying out per share. And given the relative stability of their business overall, it looks like their dividend is pretty healthy and supported by their cash flows in this case. Based on their profile, they might have less flexibility to keep increasing this dividend than some other businesses. So incrementally, their dividend increases going forward may be smaller than they have been in the past. But this might not necessarily be the case. So in summary, Medtronic checks the box on 5 out of 8 pillars. The company is off on our valuation metrics, and they're only earning about average returns on capital. They've slightly grown revenues, and at the same time, they've also grown their net incomes and their free cash flows while keeping shares outstanding pretty much flat. They bought back about 1% of shares over this time frame. The thing to like about the business is that they're really utilizing a pretty prudent amount of debt in their business. This might be a business that further levers up going into the future, which wouldn't necessarily put it in the strongest financial position. Nevertheless, it looks like Medtronic is a pretty stable, very slight growth overall that's conservatively financed and again has this beautifully long track record of paying out increasing dividends. While some of our observations pointed to their dividend increases potentially slowing down into the future and having smaller increases going forward, it looks like Medtronic is a very stable business overall. Again, if you're interested in learning more about the business, I highly recommend checking out the company's filings and diving into those to truly come to a sense of the business as if you owned 100% of it and you understand its essence inside and out. So with that said, that's it for today's fundamental stock analysis of Medtronic PLC, ticker symbol MDT. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Medtronic with me, and have a great day.